Well, it's that time of year again, Paul. Corona has left, and we're back. It's that time of year. We're back, baby. We are back. Unmasked people, full baseball games. You're traveling. I see you waiting for the bus out front here on the crossroads. You wait for the bus to get home on a packed bus. You sit. Yeah, I see you out front waiting. I do see you when you're sitting there. When I drive by in my Tesla, you are
I'm sitting on the bench and just waving.
We're talking about the airlines. You're back. We're flying around, Paul. You're going to Turks and Caicos next week. United, Delta, and American. We're talking about these three companies. Where are they fundamentally? Obviously, their stock price is low compared to before. So more people are flying. Where's the stock going to go price? Give us your prediction right now. To hell with these 8 pillars. I want to know everything about these airlines from you.
So the thing, you guys brought up the airline. You guys, this is how the show works. About, we decided to record. I come in the studio around 9:28. I go, what are we recording today? And somebody will mention a stock, and I'm like, what stock? I'm like, who is that? We don't even know the stocks. The airlines, literally minutes before this, they said, hey, we're going to do the airlines. And I went, ugh. Here's why I don't like talking about the airlines.
Go on.
In general, even in a good economy, I don't like airlines very much, except for Southwest, because they're so bloated. They go through bankruptcies every 13 minutes. It's just a hard business. The unions are very big. The costs are very high. It's just
You don't just get involved in them that often.
Yeah, if I don't like it, if I don't feel comfortable with it, I don't understand the numbers, I just avoid it. Now, especially as of late, look at their financials, Seth. This is United right here.
Okay.
Okay?
Oh boy.
I look at this revenue. I mean, how do I run an analysis on this? I have to sit there. My opinion on the airlines is let them get back to normal first. Okay? Let them go through the issues of, okay, COVID's happened. They burned through a lot of cash. They probably incurred more debt. They've issued a lot more shares. Actually, let's see how many shares they've issued.
Well, let's go back. I would have to argue with you, Paul. I mean,
Argue.
Look at the last 10 years, a consistent $30 billion in revenue. It's not growing.
No. By the way, I'm not sitting there saying it's bad or good, but I'm not sitting there saying it's a very inconsistent profit. Look at this. 7 billion, 2.2, 379, lost 700, made 2 billion, made 2. I mean, it just, I mean, it can, and I'm not saying they're saying it has to be a certain way. It's just, airlines tend to have a lot of problems. I mean, you know what I mean? It's just, I'm not bashing unions necessarily. Yes, I am. However, I just feel like the costs are so high that it's just a tough business to get around. Southwest Airlines until last year had been profitable every year since they went public or we even were created or something like that. Okay, they do a great job of hedging their bets. Southwest is very expensive right now, but to me, the way to play an industry, right, a sector that you might be interested in because of a big drop in price is?
ETF?
Correct. Buy the ETF. I always recommend this. When people say, hey, what would you do about this industry? If it's an industry I don't really understand the individual dynamics, but I realize, hey, you know, stocks have fallen a lot in this industry. It's a short-term thing. COVID happened. Then maybe you buy Jets, which is their ETF, right?
So show me the 8 pillars for American real quick. We'll take a quick high.
American, 8 pillars.
Oh, boy.
I mean, it's all X's. Now, the thing is, don't care. Don't care. Yeah, don't care. Because all of the don't care. I mean, all of these are because of COVID. So the 8 pillars don't even apply here. Does that mean don't buy it? Absolutely not. Mm-hmm. You just have to do a more due diligent approach. You might do the stock analyzer tool, but even the stock analyzer tool is going to be hard because what we're going to add in future stock analyzer tool updates is certain number of years having certain growth rates. Because obviously the growth rate from last year to this year is going to be very different for the airlines than this year to next year, right? There was no growth. There was a big plummet from 19 to 20. Let me show that right here. So I found this TSA checkpoint website. Just tells you from the last 3 years, every date, what the number of checkpoints were. Okay, so in 2019, on June 15th, 2.466 million went through. Last year, 418,000. This year, 1.7 million. So it's rebounding. It's 4 times bigger than last year, right?
Wow.
So if you're a person who's going, hey, I'm going to ride some momentum, I see some momentum in these airlines because of their things are opening up, et cetera, then maybe that's what you play. Go look at the fundamentals.
Speaking of play, Mo, remember when we went to Mexico and Paul got stopped by TSA for having those adult toys in his luggage?
Yeah, that was weird.
That was last July.
That was really weird.
Yeah. Keep going,
the
Paul.
worst part was...
Keep going, Paul.
I got invited to many parties down there in Mexico, though.
They're wild.
They are wild. So these are the things you have to sit there. And I also look at this trend right here. You know, you're looking at, let's look at 3 months ago. March 15th, 1.267 million.
Up $500,000 already?
Up 400,000. And one of the things to do if you're really anal about, if you want to know the numbers, do like a roll. Speaking of adult toys, download this data. copy it to Excel and do like a 2-week average. And look at the change in the 2-week average. And you'll probably see an uptick, very consistent uptick in the travel. Again, I'm not here to tell you buy Delta, buy United. Even Love, Southwest Airlines, it's too overpriced now. I think they're factoring in. I just feel like, remember, my stock price for Love was like $60 a share. What's it at right now? $56. What was that?
$56.81.
Okay. So it's already at my price, and we still have some negative cash flow to get through. So they've probably issued more shares. I mean, look at United, guys. United has issued a ton of shares in the last year. Look at this. They were decreasing their share count. They're back up to 2017 level on shares. Above that.
And it's being priced, all of these are being priced in that travel is back to 100%. I have a lot of questions going into what is business travel in the future going to look like for the next 4 to 5 years?
See, I still think it's going to go back to normal. People disagree with me.
I do think it will, but I think it's going to take 4 or 5 years for it to get back to normal.
Think so.
Well, with everything working from home, still,
I think that's good.
Why
By
are
the
they
way,
going to start sending people?
You know, it's funny. We talked about this in the show. Everybody's like, oh, office is going to change. Now I'm seeing CEOs saying, hey, if you want to get paid, show up to the office.
Morgan Stanley said that this morning.
Yeah,
they said,
come to work.
Come to work.
They said, if you want New York pay, show your butt up to New York. And I believe in that. I agree with them. It's
I do agree with it too.
And people are saying, oh, no, we're going to work from home more. I'm like, maybe. I know a lot of people who are like, I'm sick of working from home. I worked from home for 3 or 4 years. I remember just being like, I can't stand it anymore. I need out. I need an office. I need to be able to go someplace and hunker down and not be distracted by home things.
The reason I think it's 4 to 5 years is because of what you said a long time ago to me. You said the average investor thinks they forget things after 4 years, right? So that's why I'm thinking 4 to 5 years is when it gets back to true, consistent business travel where it's supposed to be. That's what I think.
Maybe.
Yeah. Pull up the 8 pillars for Delta. We didn't look at quite at that at the moment.
Ready for how good this is going to be?
Yeah, it's bad.
It's going to be probably the same thing.
They're all going to look exactly the same.
Can you show me the Jets ETF if I want to say?
So for the Jets ETF, what you'd have to do is put them all in here. So if you're going to pull up the Jets ETF and tell me all the stocks in there, I'll pull up the 8 pillars for that, right? So one of the great things about our software, guys, which for 80 cents a day you can have it, it'll give you all this. It'll give you a Discord with thousands of people in there. You can talk to them. 80 cents per day. It gives you all these tools. All these tools are growing. If you don't buy it, you are cheap. And you don't take your investing seriously because it's 80 cents a day. I guarantee you'd put in $5 every single day just in your Starbucks coffee.
Let's show them what people can do.
Okay, give me the list.
All right. You want the ticker symbol?
Yes.
AAL is American. UAL is United. Love is in there. Delta is DAL. Alaska is ALK. JetBlue is JBLU. Save is Spirit Airlines. That's a good ticker symbol, Mo. Save.
Yeah, for them
I got that. Yeah. But what a shitty plane though. And ALGT is Allegiant Travel. Yep. And then GD is General Dynamics.
That's all that's in there?
Yeah. No, there's a lot more.
There's a lot more. But this is a big chunk of them.
It's a lot of them.
Okay. That's the top holdings.
Yeah, so GD's 3%. So keep going, Paul.
It's going to pull up, guys.
Look at this.
I mean, this is it. That's the thing. If you're just going off of pillars, which I always tell people, don't just go off of pillars. This looks terrible. This doesn't mean it's bad. It just means recently it was terrible, and there's an exact reason why. COVID screwed everything over. Just like if you were if you were DoorDash, I don't think you should account for the last year saying, oh, the last year is going to be the future. Well, the last year was skewed. Does that mean that people are going to use DoorDash more and Grub? I use Grubhub and DoorDash more now because of COVID. Does that mean that we're going to use it at the same rate we did? No, I much prefer to go to restaurants now and get back out there and say, hey, we're doing this. The 8 pillar software and the 8 pillars in general is a general idea of what you should look for and what you should approach next in how you look at a stock and how you look at an investment. That's it. We're trying to teach you how to fish. We're trying to teach you a process. The process that works for us. It doesn't mean it's going to work for you. Process works for us. I look at this and I don't think avoid. I look at this and say, I need to do a lot more research to understand why is this like this and what's going to be the future of it, right? But this 8 pillar software, you just put in this entire group of stocks right here is here. Look, no earnings, no PE. They have no earnings. They have no earnings. I mean, they've made $45 billion less last year than they did 5 years ago. $45 billion less, guys.
I forgot to tell you, I was watching a hype YouTube channel and they were talking about some startups and how amazing they are. And they called this, Paul, pre-revenue investing.
I'm watching Silicon Valley the other day. Did you watch the video I sent you in a group chat? Did I send that video in the group chat?
Mm-mm.
I think I did. Silicon Valley's that show. And in season 2, they get some investor, this like real douchey guy. And he goes, and they're like, okay, so we're trying to get revenue. He's like, whoa. What are you doing? He's like, well, we're trying to get revenue. He's like, no. The second you make revenue, all of a sudden revenue matters. It's all about the pre-revenue.
Pre-revenue.
Don't even think about revenue because pre-revenue is like, oh, and that's the way it is. The second you start generating income and revenue, boom.
Mo, are people trading any of these airlines?
I mean, if you look at, so
Look
this
at
is
that,
this is Delta. Looks like this. Let's pull up United Airlines. They're all basically the exact same chart. What was the last one? American Airlines?
Yeah.
Yep.
Look at that. They're all exactly the same. And it reflects everything that we're seeing over there. They're all this 50% rule. They can't break through that area. They try and they can't do it. So you need consistency in the airlines again. That's what you need.
It'll happen.
It'll happen. For sure it's going to happen. Airplanes aren't going away. So these
but
airlines,
remember,
these are the big dogs out there. So
yep. Airplanes are not going away.
Yeah. Just be patient. Don't get all excited.
Yeah. That's our take on the airlines. I do like jets. Do you think jets still have some room to grow, Paul?
I haven't even looked at it lately.
Well, you know.
And by the way, I have no idea. What was it before the...
Like 31? It's at 25 now.
Oh.
It doesn't have that much room to grow.
Jets was like $11 back in the pandemic time.
Yeah, $11.
Yeah, I think the peak... So the peak
Now
before...
it's about 26.
The peak before was...
$34.
$35.
Yeah.
But even look at the ETF.
But that's
The
assuming...
same exact chart.
And that's assuming at $35. One, all these companies have issued way more shares probably than they had back here. And two, that assumes they were fairly valued here, which it was 2018. I doubt it was
not.
fairly valued.
Yeah.
So you're just looking at going, I don't know. I think if you have jets, maybe it's time to move on.
Yeah. All right, that's our take on the airlines, Jets ETF. If this resonates with you, looking at the math, you can get this software as a part of our Patreon.
80 cents a day.
Join now. We'll embrace you in our Discord. And that's our take. Fondle the thumbs up on the way out. Love you guys. Patrons, you know I love you.